Assalamu Alaikum everyone, welcome back to another video. I hope you're having a wonderful day. So in today's video we are focusing on one company that was requested by one of the brothers on the Discord, and we want to go over the information about the company, the financials, the future estimates. We want to look at the valuations, we want to look at the ownership, and then at the end I'm going to give you my opinion of what I think about this company. But before we do that, just press that like button because it really makes a huge difference, as well as of course join us in the Patreon account where you get access to all of these things, including the Discord where a lot of these brothers are sharing very good practices. Now that out of the way, the company that we're talking about today is Lululemon Athletica. This company is one of the companies that actually I've spoken about very long time. It's always been overvalued. That's why I've not touched this company at all. If you don't know what the company does, is very simple business. They're very similar to Nike and so on. It offers pants, shorts, tops and jackets and so on, health, lifestyle, so in like yoga, clothing. The reason I didn't want to show you their website is because some of it is just a little bit not appropriate for us to see right now. So such basically yoga, running, training, all of these things they have within their products. And I just want to show you very quickly one page summary of the revenue that basically they reported recently, and then I will talk about a bit more information about the company. So total revenue for the 2023, okay, so the entire 2023 was $9.6 billion. That's about 19% up from where it was a year before, basically year before. And adjusted diluted EPS of $12.77, which is about 27% up from where it was. And total comparable sales was about 14% up. Now, just focusing on just the last quarter was $3.2 billion, which was 16% up, and diluted EPS was about $5.29, which is about 20% up from where it was, and total comparable sales was about 12% up. Now, in terms of this, is actually was a surprise to me because I thought a lot of their products were bought by women. In fact, it is not. So, product innovation side of things, so women's revenue was about 13%, whereas men's revenue was about 15%. So that's interesting. And guest experience for store revenue, and again this is another thing, this company sells or makes almost more similar or more product sells more products on digital revenue side of things rather than in store. So about 15% when it comes to store revenue and 17% digital, which is quite nice. And they are very well diversified. So if you think about the America's revenue side of things was about 9% market expansion base, they grew that. But when it comes to international, that's actually slightly growing. And it's interesting to see this because it's not just a kind of US based company, it's a global company. So this one page was actually quite nice to see, and there's a little bit more information on that, and if you're interested, have a look at the company's website. Now, looking at one of the reasons why we're looking at this company, of course one of the brothers requested, but it is because it has come down quite a bit when he reported the revenue. But they basically beat the EPS as well as the revenue side of it. Well, the issue was basically guidance that were not exactly what the streets were looking for. Remember, this is one of those high-flying companies over the last 5 years plus, right? And because this is trading higher multiples, people are expecting a lot from the company. And this is what's going to happen to a lot of these high-flying companies, technology side of it, moving forward. A lot of the growth side of it is already backed into the revenue side of it. So they're expecting higher returns. And when that does not happen and the company comes out and says, no, we're not going to do as well as we said, that's when the stocks will tank. And this is why we really need to be careful, especially with these high, basically very expensive stocks that are out there right now. And this is probably one of the reasons why the stock is down when it comes to the outlook. So for the first quarter of 2024, the company was basically expects the net revenue to be in the range of $2.175 billion to about $2.2 billion, and the consensus were 2.26, so it's slightly lower than what the streets were expecting. But that still gives the company about basically 9 to 10% growth, which is quite nice. In terms of EPS, they expected $2.35 to $2.40, but the consensus was 2.55 for the quarter. And for that reason, basically the stock of course went down quite a bit. And of course these things do happen, okay? The companies sometimes underestimate what they were going to deliver, and then basically they deliver better than that, and of course the stock goes to the moon and so on. So what we now need to do is look at the financials of this business. And as you can see here, we've got almost a 50 billion market cap right now. The price, as you've seen here, is $389 per share. Looking at EPS, you can see from $1.89 to right now $14 and basically to and 20, and that's actually from 2015 to right now where we are. So it's absolutely massive growth in terms of that. Free cash flow per share is also growing the right direction, basically going the right direction, but they're expecting that to decline slightly. Earnings per share, shares outstanding, as you can see here, is declining. So they're buying back their own shares, which is quite nice. The company does not pay any dividends, but I wouldn't be surprised in maybe in the next 4 or 5 years if they start paying dividends. Total sales, because they do have quite a bit of free cash flow, so they potentially could use that. Total sales, as you can see, is growing, heading the right direction from $1.8 billion to right now $9.62 billion expected. Return on equity of 42%, which is absolutely huge, and return on invested capital of almost 40%. And this is probably one of the reasons why a lot of people love this company. Operating margins of 23% and then free cash flow margin of 17%, which is absolutely huge. And when it comes to debt, they basically have no debt, which is absolutely wonderful to see. One of the things I love to see about this type of companies is basically how much of that total revenue, basically is becoming a gross profit. And if you check this out, from 1.7, which we've just seen, to right now $9.6 billion of the in terms of revenue side of it, this is how much they basically spending. So from that, they're making up a gross profit of 5.6 from 9.6. So that is basically 5 billion of that basically becomes a gross profit, which is really, really good. I didn't expect that at all. Because remember, they are, of course, making those products. They're not like a kind of software company where there's not much of overheads, if you like. Whereas this is really interesting. 5 billion of that for 9.6. Basically, 5.6 of that is actually gross profit, which is nice. But now what we want to see, how much of that is the net income, and that's $1.5 billion. After they paid all the taxes and debt and all of that, they don't even have any debt. All the taxes and everything else, they've got $1.55 billion. Now I want to see how much of that then becomes a free cash flow for this company. And for that, we go into Yahoo Finance, and as you can see, from like $500 million to right now $1.6 billion of free cash flow, which is quite nice. Is heading the right direction every single year over the last 5 years, which is absolutely really good to see. So now what we want to see is the company where it's been so far, it's been really good. So what we want to now see is what is the expectations moving forward. So if we look at the earnings, for example, estimates for the next few years, 20%. Hold on a second. So in why is this January 2027? What is happening here? Yeah, Seeking Alpha has gone a bit crazy, which is a bit really strange. So 2027 is where we're starting. Where are we now? In 2024? What's going to happen next few years? Anyway, so we've got 10 analysts here looking at 2027 earnings or 2028 earnings, for example. It's about 20%, almost double digits, almost 20% every single year. And then the same goes for the revenue side. I want to see what is going on with this company. It'll be interesting. What am I missing here? 10%, 9%, 11%, and then so on. So double-digit growth expectations moving forward. Now, looking at Yahoo Finance, so next year they're expecting about 12.6%, which is fine. That's what I expected from this company. Again, basically mid double digits, which is absolutely fine. And the current price of 389, and the average they're expecting about 485. That's basically the average price they're expecting after they've basically added all the what the analysts here are saying. And as you can see here, it's just a buy right now according to them. If we go back to Seeking Alpha, and as you can see, Wall Street, as always, of course, it's bullish. 17 strong buys, 8 buys, 6 holds, and 2 sells, and 3 strong sales, which is interesting. And it's about 24% upside from where we are right now, according to them, $482 per share. Now, this uses, of course, the analyst out there. Even if we check the Wall Street analyst here, there's only 6 people looking at this company, so they're not that many. So I'm not really interested what they have to say, but so that's for. Yeah, we'll just focus on Wall Street for now. Now let's go to Morningstar, because this is where I have been checking this company for the last 4 years. And each time I check is either 1 star, 2 stars, because it means it's very expensive stock right now. So right now it's about 2 stars. That's 40% premium from where we are now. $278 per share is where they think the price should be. The company does not have a wide economic moat. And in terms of total return in the last 10 years, okay, we're looking at about 23% and each year, which is absolutely huge. So if you had this company in your portfolio for the last 10 years, well done to you, because you made 23% every single year for those 10 years, which is wonderful to see. Now looking at simply Wall Street, you can see it's about 2.6% overvalued right now. $378 per share is where they think the price should be. Now looking at ownership side of things, so one thing I would like to do sometimes is just check who's buying it, because this will kind of give me an idea. If insiders are buying this stock, then to me that means it's probably undervalued at that point, and they know how much the company is valued, of course, right? But right now it's all sales. So since December, they have been, since March of last year, they have been selling this stock. So it will be interesting to see in the next 3 months if they actually start buying more, because if they feel like it's undervalued. But they have been selling, these individuals have been selling the company. Now in terms of ownership breakdown, which is again another interesting one to see, is institutions actually basically have almost to 88% of the company ownership, which is really interesting. And then private is about 4%. That might be the CEO, the people that started the company. The public is about 4%, and then individual inside is about 3.82%. Now if you look at the names of these institutions, I think this is Fidelity, and then you got Vanguard and BlackRock and so on. So these are, because they're part of the ETFs, that's why they own a lot of these stocks in here, a lot of these shares of this company. And now just comparing this with the S&P 500, as you can see, we're looking for total return in the last 10 years, 130, by last 5 years for this company, 173% in comparison to 86% from the S&P 500. And the last 10 years, we're looking at about 621% total return. Remember, this company doesn't pay any dividends, so it must be because of the just price appreciation. And then the S&P 500 is 180%. So it has definitely beaten the market, and is a wonderful company, and business wise is growing, is heading all the right directions. But what we want to see is now if it is actually a buy for all of us. So what I've done is used the Morningstar valuations, which I think is very realistic. I'll be honest with you. Seeking Alpha is a bit, I'm not too sure, because a lot of these analysts are bullish on this company. Simply Wall Street, again, using intrinsic values, not bad at all. Multiple values I thought was the best to use for this company, because everything else didn't add up. And that gave me $294 per share. That gives us about $358 per share of basically intrinsic value currently, which then means that's 8% from downside from where we are now. Okay, and if you say, okay, this is maybe one of those risky businesses, whatever, and you want a 10% margin of safety, that's about $322 per share. That's basically about $50 or so from where we are now. But if you say, okay, maybe this company is very safe, everything is fine, okay, $340 per share. One thing you need to be careful about this type of business is because it's very cyclical business. What I mean by that is this is a consumer discretionary, meaning people will buy their products if everybody basically has extra money lying around. If we are in a recession, if people are just more worried about, paying their bills and so on, nobody will go to these companies and buy, pans for, 100 something pounds or whatever they are. So you have to be mindful of that. If the economy is booming and generally everybody's feeling happy about their jobs, basically not worried about their jobs, this type of business will actually boom. The second thing is there's a lot of investors, like momentum investors, who are actually investing in this company. What I mean by that is there are people who are looking at charts, and so they know that it's going to go up at least another 5-10% next week, and then probably come down, and then they basically time it, and just almost like a day traders, if you like. So you have to be careful with this type of business, just similar to Tesla basically. So anyway, I just want to make sure that you guys are aware of that. I hope this was helpful. If it was, please like the video, subscribe to the channel, and as always, genuinely, it takes a lot of time to put these videos together. I would really genuinely appreciate if you can join us on the Patreon account, where you get access to all the Discord and everything else. Have a wonderful day. Assalamu Alaikum.